Hello, my name is Giannis and today we're going to talk about the Canadian economic forecast for March of 2019 to see what the economic projections are for the next 20 months approximately. In terms of real GDP, we are comparing the fourth quarter of each year, 2018, 2019 and 2020, to see what the expectations are for the key indicators. The real gross domestic product is expected to remain fairly stable because it was 1.6 in 2018 in the fourth quarter and is expected to be at 1.6 and 1.5% respectively in the fourth quarter of 19 and 20. In terms of consumer price index for all items, it was 1.1% at the end of last year and it's expected to be at 2.1% respectively for 2019 and 2020. So it's going to increase a bit. In terms of the overnight rate, we expect a very small change from 1.75% in the last quarter of 2018 to 1.83% in the last quarter of this year and to 2% at the end of 2020. The 90-day banker's acceptance note, which is the basis for variable rates, is currently at 2.2%. Well, it was at 2.2% at the fourth quarter of 2018 and is expected to be at 2.25% and 2.35% respectively at the end of 2019 and 2020. In terms of real disposable income, we had a 0.3% increase in the fourth quarter of 2018 and we expect it to be significantly higher at 1.8% and 1.4% in the last quarter of the current year and the next year. In terms of savings rate, we have a favorable development as it jumps from 1.1% in the fourth quarter of last year to 1.4% at the fourth quarter of 2019 and 1.7% at the fourth quarter of 2020 respectively. In terms of the unemployment rate, we have a steady picture at 5.7% for all 3 years, 18, 19 and 20. In terms of housing starts, we have a slight decrease from 217,000 in the fourth quarter of 2018 to 200,000 approximately for the current and the next year. In terms of existing home sales, we had a 12.4% at the end of the fourth quarter of 2018. We expect to be an increase of 1.7% by the end of this year and 2.1% by the end of 2020. And last but not least, employment growth seems to have peaked at 2.2% last quarter of 2018 and is expected to be at 0.9% at the end of this year for the last quarter, and for the last quarter of 2020 at 1.1%. Overall, the economy seems to be a little weak, and that's the main reason the overnight rate is not expected to rise beyond 2%. It currently stands at 1.75%, and the overnight rate is the rate that affects variable mortgages and home equity lines of credit, and that's why the government wouldn't want to increase that anytime soon, knowing that it's going to add more debt for Canadian households. So we seem to be fairly stable at this point in terms of the overnight rate that affects variable rates and home equity lines of credit, and we expect that the government will be very cautious going forward so that it protects Canadian households. Hopefully you have found this information to be useful, and if you did, feel free to share it with a friend. Thank you so much. Have a wonderful day.